Hey everyone, welcome back to Corporate Decoder. Today we're diving deep into Blue Gold Limited's latest filing, and let's just say it is a real nail biter with more twists and turns than a Savannah road. So imagine a company trying to strike gold in Ghana, navigating tricky legal battles and complex financial deals all at once. That is Blue Gold Limited for you, and their recent report pulls back the curtain on a business facing some serious challenges, but also holding on to a flicker of potential. This filing is an amendment to their registration statement, basically updating the public on their progress and any significant changes. Think of it as a progress report, but for the stock market, the big news right off the bat is this secondary offering. This means existing shareholders, not the company itself, are selling a chunk of their shares. The main player here is a shareholder called 3ILP. They're looking to sell over 1 million shares. Now, why are they selling? Well, it is tied to a deal they struck with Blue Gold. Back in August of 2025, Blue Gold made a deal with 3ILP for convertible notes and warrants. Convertible notes are like loans that can be turned into company stock later, and warrants give the holder the right to buy stock at a set price. This deal brought in some cash, but it also created the shares that 3ILP is now offering to sell. They've already issued some of these notes and warrants and are planning to issue more. The conversion price for these notes is about $13.51 per S-share, and the warrant exercise price is $16.88. This is important because it tells us what price the stock needs to hit for these options to be valuable. Now, for a reality check, as of mid-October 2025, their stock was trading at $10.01 and the warrants were at 55 cents. This means, as it stands, the warrants aren't really worth exercising because the stock price is way below the exercise price. The company acknowledges this, stating they don't expect to rely on warrant exercise for operations. Let's talk about the risks, because there are quite a few. The company admits, very frankly, that their financial situation raises substantial doubt about their ability to continue as a going concern. This is a big red flag, meaning they might not be able to stay in business without significant changes or new funding. They've had operating losses and a big working capital deficit. While they've secured some financing, it is often tied to strict conditions or future revenue expectations. This is where the story gets really interesting. Blue Gold's operations in Ghana are facing a major roadblock. The government has issued a notice to terminate their mining leases. This is a huge deal because their entire business plan hinges on developing these leases. The company is disputing this, and they've even started international arbitration. They're using an investment treaty between the UK and Ghana to try and resolve this. The outcome is uncertain and could drastically affect the value of their mineral rights, potentially making them worth nothing. They've also mentioned active media attention and speculation about the leases being potentially issued to a third party, which adds another layer of concern. Beyond the operational risks, there are also significant shareholder actions. A lawsuit has been filed by former sponsors of a predecessor company. They're fighting over whether certain shares are unrestricted. This is already leading to an injunction that has halted a shareholder meeting, creating more uncertainty. The company believes the claim is baseless, but acknowledges it poses a possibility of loss. Now, let's peek at the financials. Looking at the numbers for the 6 months ending June 30, 2025, they reported a net loss of nearly $8 million. This is actually an improvement from the previous period's loss of over $4 million, but it is still a loss. Their total operating expenses were almost $6 million for this period. As of June 30, 2025, they had about $300,000 in cash, but a working capital deficit of over $10 million. That means their short-term liabilities are much higher than their short-term assets, and their total assets were just under $34 million. A significant portion of this is tied up in mineral rights, valued at $30 million. But remember, the future of those rights is tied to that ongoing dispute in Ghana. So, wrapping up the financials, the company itself states that there is substantial doubt about its ability to continue as a going concern. This is basically a formal way of saying they might run out of money. Considering all of this, Blue Gold Limited is in a complex and high-risk situation. They're battling legal challenges in Ghana that could evaporate their primary asset. Facing shareholder litigation and operating with a very thin financial cushion, the potential for the mineral rights to become worthless is a massive risk. On the flip side, if they can resolve the legal issues in Ghana and successfully restart operations, the existing resources are substantial. However, the path forward is incredibly uncertain and fraught with peril. The company is essentially betting on a legal victory and a massive operational turnaround. For investors, this is a classic high-risk, potentially high-reward scenario, but the risks are currently front and center. The business's direction hinges heavily on resolving that critical lease dispute. Alright, that is our breakdown of Blue Gold Limited's latest filing. What is your take on these numbers and the company's precarious position? Will they strike gold or hit bedrock? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the world of corporate finance. And hey, for even more actionable insights and to join the conversation, check out our Discord community linked in the description. Thanks for watching. See you next time.